Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, today's exciting day because there's a lot going on.
Yes.
Okay, so first of all, we just got an update for Las Vegas market. We're going to do that video later. Okay. So you get two for today. Today's video is the February NAR report. We just got all the February numbers, and there's been like a ton of changes, which a lot of people have been commenting on the thing. Also today is the Fed meeting, which is probably by the time we get this video up, the decision will be announced. The consensus is rates will go up 0.25%. But what's interesting is mortgage rates are already down. Right. Because mortgage rates were expecting them to go up more. Now mortgage rates have dropped a little bit. So there's a lot of exciting stuff going on. But we're going to start off with the NAR First National. This is a big one. This has got I think 11 or 12 slides.
Wow.
Okay.
Bring it on.
So let's go through here. Okay, existing home sales surged 14.5% in February, ending 12-month streak of decline. Largest monthly percentage increase is July of 2020. This is the 14.5% what? What does this mean?
Transactions.
Oh, number of homes. So from February to March of last year, there were less homes being sold.
Right. So remember, this is about the number of transactions, not about the price of homes, right?
Right. Okay. Not prices.
All right, so we've had more transactions. That means people are coming back into the market. So last year we had declining transactions, partly because of inventory, partly because of prices, so all kinds of things going on. Then, of course, through the fall, we had declining transactions, again, because of inventory, then because of interest rates. And this has pushed people now into the spring. And we've talked about this. So people that have been kind of on the sidelines, they've just kind of thrown their hands up going, okay, this is just the way life is. And we're going to come in and we're going to purchase. Yeah,
it's definitely not bad news for real estate, having far more people in buying. What's really surprises me, Juana, and we'll read this next slide and talk about it, is this is happening in an environment where inventory is, in Vegas for sure it's declining. Nationally it is declining. And we'll go through all the numbers because there's something in here that really surprised me that I wasn't expecting. Okay. Existing home sales jumped 14.5% in February to a seasonally adjusted annual rate of 4.58 million. This is the seasonal rate, snapping a 12-month slide and representing the largest monthly percentage increase since July of 2020, when it jumped up 22.4%, and that was because of COVID. That was the first time when people said, we need to start buying real estate. And that was July 2020 was the kickoff of this ridiculous thing that we've seen in real estate, right?
Right.
Okay. Now, here's the big news. The median existing home sales price decreased nationally 0.2% from the previous year to $363,000. Okay. So this is the first time in 126 months or something, right?
Right. It's the first time in more than 10 years that it's decreased, yes.
Year over year.
Right.
Nationally. So it did go down 0.2%. It was 363.7 last year. It's 363 now. So this is median and this is national.
Right. So it's not a lot. And this is coming off the highest sale prices ever. So the idea that we're going to have an adjustment is clearly something that was in the realm of possibility and more likely than not. And it's also likely that we will continue to adjust a little bit. Now, does this mean that we're going to take a nosedive? Unlikely. Does it mean we're going to continue to adjust? Very likely.
Okay. The inventory of unsold existing homes was unchanged from the prior month at 980,000 at the end of February, the equivalent of 2.6 months supply at the current monthly sales pace. 2.6 months, Juana, is historically what?
It's really low, and these are probably the wallflowers.
These are the wallflowers. These are the houses. Because as we go through this, we're kind of burning through these. You're going to see some data, which is, like I said, we haven't got the data that surprised me yet.
Okay, bring it on. Come on.
Okay, here's a quote from Chief Economist Lawrence Yun of NAR. Conscious of changing mortgage rates, homebuyers are taking advantage of any rate declines, said NAR Chief Economist. Moreover, we're seeing stronger sales gains in areas where home prices are decreasing and the local economies are adding jobs. So wherever prices are decreasing, more people are jumping in because they're seeing advantages here. This is stemming any thought of market crash. And this is also sort of refuting this idea that there's going to be this massive recession. There could be a recession. Remember, we had a recession last year. The first 2 quarters of 2022 recession, and what did home prices do? They went the highest level they've ever gone because we had negative GDP growth for the first 2 quarters.
So, part of it is I think we're going to have to redefine recession because we redefined it last year. We may have to redefine it again this year.
Okay, this is kind of one of the ones that got me. Total housing inventory registered at the end of February was 980,000 units, identical to January and up 15.3% from a year ago, 850. Unsold inventory sits at a 2.6 month supply at the current sales pace, down 10% from January, but up 1.7 months from February 2022. Okay, this is why this gets me. That 850,000 a year ago was the lowest ever. The lowest ever. We're at 9. Normally, we're at 2 million homes. We are literally sitting barely above the lowest inventory we ever had. If you would have wanted a year ago, made a video telling the market crashers that, first of all, annual year-over-year sale prices wouldn't be 40 or 50% down. They'd be nationally 0.2% down. And that, remember, inventory was supposed to skyrocket higher than, worse than 2008, which was 4 million homes nationally on the market. And that we're not even at a million. We're at a quarter of what they said it would be. And home prices, instead of being down 40 or 50%, are down 0.2%. They literally have to be down like 250 times more than they are to get to 40 or 50%. What do you think they would have said to you?
They would have said that that's not going to work on their channel.
Not going to work on their channel. So what do you think's going on here?
Look, we don't have a whole lot of inventory, and we've talked about this because sellers are not ready to put their homes on the market because they don't have anywhere to go. They have nothing to purchase, and on top of that, they're hanging on to their interest rate is somewhere around 3%. So there are a lot of things going on with them. The dam is going to break. I mean, at some point, sellers are going to throw their hands up and they're going to come back and play with the rest of us. But it's going to be a little while. And it's going to take something else. It's going to take probably a moderate drop in interest rates. I'm not suggesting that interest rates are going to go back to 3% because I don't think they will. Certainly not anytime soon. But it's going to take a moderate drop in interest rates, and it's going to take an uptick in inventory. So it's a chicken and the egg thing, right? The sellers won't come back until there's an uptick in inventory, and there can't be an uptick in inventory until the sellers come back. So the tipping point with that is going to be the interest rate.
This next quote, inventory levels are still at historic lows, Yun added. Consequently, multiple offers are returning on a good number of properties.
Yes.
And you're seeing this.
Yes, we are seeing that. Look,
and you're seeing this on high-end properties.
Right. So look, properties that are a nice product and properties that are priced appropriately are getting a lot of interest. That's just the bottom line. And that's in any market. Okay,
here's the next one. The median existing home price, and this is good news. The median existing home price for all housing types in February was $363,000, a decline of 0.2% from February 22, which was the highest February ever. $363,700's prices climbed in the Midwest and South. So Midwest and South prices are still up year over year from the highest year ever. This is now the highest year ever in the Midwest and South. So if you're in Florida or if you're in Oklahoma or someplace like that, home prices are more than they were last year. Okay, this ends a streak of 131 consecutive months of year-over-year increases, the longest on record.
Right.
The negative Nellies are going to constantly quote that if home prices don't go up every single year, every year, month over month, it's like the worst thing ever.
Well, then they're unaware of markets.
Yeah. It's honestly been, we knew this wasn't going to happen. We said a year ago the prices would have to moderate. Right. We literally said they would have to moderate. Here's the next one. This got my attention a little bit. All cash sales accounted for 28% of transactions in February, down from 29% in January, but up from 25% a year ago. Right. That's a ton.
Right, and remember, this is backward looking. So with everything that we've had in the news regarding banks lately, it is not out of the realm of possibility that we might see an uptick in all cash sales.
And here's the other thing too. This 28% in February, these homes were put under contract in December, January. This is March. Can you imagine what April and May are going to look like? I mean, it's really going to look bullish for the next few months. Of course, that's going to change. What's going to happen in, May, June, going into the fall?
Things are going to stabilize. Things are going to cool off, and the crashers are going to do really well.
Crashers are going to be like, oh, see, we called it. Every year we call it. The home prices will go down. Distressed sales, foreclosures, and short sales represented 2% of sales in February, nearly identical to last month and a year ago. So a year ago was the lowest level ever of foreclosures and short sales, 2% of all sales. So the hottest market ever, we still have it. So you were told by the crashers a year ago, the foreclosures were coming. The banks were preparing, like they were going to hit the market in last year and crash the market, and they're not there. And we just did a national video. There are no pre-foreclosures. There's no, as a matter of fact, the number of people missing payments, behind on their payment, 0.67% is literally the lowest it's ever been. Like, they're not even people late on their payment. The banks can't just wake up one day, you know what? Let's just foreclose on a bunch of houses because they lost 0.2% in value. We're going to foreclose. They can't do that, right?
No.
All right. Now here's another good one. According to Freddie Mac, the 30-year fixed mortgage rate averaged 6.6% as of March 16th. That's down 6.73 from the previous week, but up from 4.16% a year ago. So interest rates are up 50% from last year. Home prices are down 0.2% nationally, right? That's kind of interesting because a lot of people were told that prices are strictly based on interest rates, like a teeter-totter. And if interest rates go 50%, home prices have to drop 50%. That didn't happen.
And it doesn't work like that.
It didn't happen because it doesn't work like that. How does it work?
No. So interest rates definitely impact affordability, and they impact the type of home people buy, but it doesn't necessarily impact whether or not somebody's going to buy. So if you were going to buy a home, let's say for $500,000, maybe now you're going to buy a home for $400,000, but you're still going to buy a home, right? And it doesn't mean that the seller is going to reduce from $500,000 to $400,000. It means that you're going to change your sites from the homes that were 500 to homes that are 400, from homes that were 500 to homes that are now 400.
Okay, so let's talk about that too, because that's super important. So what you're saying is people are more attracted to the lower end homes.
Yes.
Right?
But because more people can, right. So, I mean, a millionaire can afford a lower end home, and then somebody, on the low end can afford a lower end home. So you've got more people who can afford lower end homes. Not everybody can afford the $1 million home.
Let's talk about how that affects how the mix of what properties people are buying affects median price. Because everyone's focused on median price. Home prices are down. All home prices are not down. If you're in a lower end property, for example, in Vegas, those home values are worth more than they were a year ago. If you're in a luxury home, it's worth less. If you're in the Midwest or South, almost all homes are worth more.
Right.
If you're in the Northeast or the West, a lot of homes are worth less. So let's talk about the mix of homes, because people don't understand what median sale price means.
Okay, so here's the thing. The more transactions you have in a price group, the more that price group is going to impact what the figures look like. So if you have lots of transactions in the lower end, it's going to make it look like the median sales price is down because it's not balanced by the similar number of transactions in the high end. So that's really not a good way always to take a look at what's going on in the market. A better way to look at what's happening in the market is by looking at price per square foot. Because if you're looking at price per square foot, now it's price agnostic as far as which bracket of home you're looking at. So whether it's a lower end home or a higher end home, now you're just comparing price per square foot, and then you can see a trend a little bit easier, and you're not paying attention to so much noise. We're
gonna do a Vegas market update. Price per square foot in Vegas has been rising. Yeah, it's been going up. We have the data. It's far more accurate than whatever Redfin says the median whatever price is. We have far more granular and actual data than a median price.
Right.
Yeah.
Okay. What else have you got?
That's that is the update. So
Okay.
let's kind of summarize this. Sales have stopped going down. The number of sales are at 14%.
Right.
That was unexpected. The other thing that was unexpected was that 4.6 million annual rate of sale.
Mm-hmm.
It was expected to only be 4 million.
Mm-hmm.
That's what got people. That's what made the article sort of a big deal.
Well, it did, but I think people didn't keep in mind how many people just kind of stepped to the side in the fourth quarter. And we talked about this before. Lots of people stepped aside in the fourth quarter and then came in the first quarter. So you had the people that were going to buy in the first quarter anyway, and the people from the fourth quarter got moved to the first quarter. So that's what made these numbers pop.
The other thing that we don't know, that we're not going to see for 2 months, we've had some issues with liquidity in banks.
Mm-hmm.
The Fed has moved in to basically back them. Matter of fact, Yellen even came out and said she would literally back all the regional banks. Like
Mm-hmm.
they would literally backstop them all to stop, because they don't want to see a run on the bank, because they don't want there to be a panic. We used to have panics quite a bit in the 1920s. Bank runs, we were having probably 500 a year or something in the U.S., hundreds a year. It was a very common thing. But what we don't know is how many people have withdrawn money and have decided to go for a tangible asset.
Mm-hmm.
And I think that my prediction is that these cash percentage purchases are going to go up. I did meet with an investor last week, one of our investors. We manage their Vegas portfolio. He indicated they do have a ton of cash because they haven't bought anything in
Couple years.
They're waiting for a deal. That's anecdotal, but I think there's a lot of people sitting on cash that are waiting for the right deal to come along, right?
Right. I think there are a lot of people sitting on cash, and particularly people in our age group and maybe a little bit older. They're looking at what's happening with the banks, and they're looking at the cash that they have in the banks, and they're thinking, maybe between that and between inflation, maybe purchasing another investment property might be a good idea. It might be a good place to store some money and get some equity. Now, people have been getting a little bit of interest in the banks, so that's part of the reason why so many people have so much cash in the banks. But with the recent trials and tribulations of the banks, I think it's giving people a second thought to maybe take some of that money out, put it in real estate, because it will also hedge against inflation.
Yeah.
Okay?
Yeah.
So, hope you enjoyed the video. Hope you found this interesting. If you liked it, if it was interesting, if we entertained you, if we made you laugh, if we made you snort your coffee, then please like the video, subscribe, hit the notification bell, share the video, leave us a comment, and we'll see you on the next video. Bye.
Bye.